Hi everyone, I'm Dave Hatton, and I'm here with John Reeks. We're with the Northern Illinois team of Old National Wealth Advisors. We want to give you a quick update on some structural changes for 2025 that could impact your financial plans. Specifically, these updates address several tax law changes from the recently passed One Big Beautiful Bill Act, and they affect everything from Social Security taxation to estate planning. Before we begin, I need to provide a brief disclosure. And while the information we will provide has been gathered from sources we believe to be reliable, it cannot be guaranteed. Federal tax laws are complex and they are subject to change. Neither LPL nor its registered representatives, like John and I, can provide tax or legal advice. Be sure to contact your tax preparer before acting on any of this information. John, tell us a little bit about the changes on standard deductions.
Sure. First, the previously increased standard deduction was made permanent and increased to $15,750 for single filers and $31,500 for joint filers. Seniors and the blind receive an additional $2,000 per person. This change may reduce the need to itemize deductions for many taxpayers. This number has always been indexed for inflation and increases every year. Dave, tell us a little bit about how this affects seniors.
Well, a major change for many retirees is the increased standard deduction for seniors. While Social Security benefits are not fully tax exempt, a new deduction of up to $6,000 per person, age 65 and older, or $12,000 per couple was introduced with the new law. This deduction phases out for individuals with incomes over $75,000, and couples over $150,000. And it is currently available through 2028. This additional deduction could reduce or offset taxes on Social Security for many middle income retirees. Most senior taxpayers don't itemize and instead utilize the standard deductions. In 2025, those standard deductions could total as much as $23,750 for individuals and $47,500 for a couple, assuming both are over age 65.
It's great information, Dave. And current tax brackets, which were previously set to expire and revert back to pre-2017 levels, were made permanent and will be adjusted for inflation. The top marginal rate remains at 37%, applying to incomes over $626,350 for individuals and $751,600 for joint filers. Other brackets have shifted slightly, so it's a good time to review your income strategy and your withholding. I understand there are also some updates to gift and estate tax, Dave.
That's right, John. The federal estate and gift tax exemption has been permanently increased to $15 million per person, or $30 million per couple. That number is indexed for inflation. This provides more flexibility for legacy wealth transfer planning. However, if you are an Illinois resident, this does not change. The Illinois state estate tax, which affects Illinois taxpayers with estates greater than $4 million. As a reminder, that number is not indexed for inflation, nor does it carry the portability option for married couples available on the federal level. Lastly, John, what if someone wants additional information?
Absolutely. These changes may offer new opportunities or new challenges depending on your situation. Although tax advice must be offered by a qualified tax professional, we can assist in devising an appropriate tax strategy for you. If you have questions or you want to explore these updates, how these updates affect your plan, let's schedule a time to talk.